Alphabet continues to show a stellar performance and create additional shareholder value. The company recently released a great earnings report. Its AI initiatives are making it possible for the business to adapt to the changing market environment, and its stock remains undervalued even after the latest rally. While the competition is on the rise and regulatory risks are becoming a major issue, Alphabet's growth opportunities still outweigh its downside and make its shares a solid investment in these highly volatile times. The upside is clearly there. Alphabet's stock has appreciated 10% in the last month, and it may continue to grow further in the upcoming months. This is because Alphabet's business continues to expand, and in Q2 alone, it managed to increase its revenues by 13.8% year over year to $96.43 billion, which exceeded the expectations by over $2 billion. More importantly, despite the rise in popularity of AI chatbots, Alphabet's search business continues to perform well, and in Q2, generated $54.19 billion in revenues, up 11.7%. To mitigate the threat from chatbots, Alphabet itself began to launch various AI products and features to retain users primarily on its Google search engine. The company's AI Overviews feature within Google recently gained over 2 billion monthly users across the globe and helped the company increase the number of overall search queries year over year. In addition to that, Alphabet's AI mode now has over 100 million monthly active users and can help execute more complex tasks using the latest Gemini 2.5 model. At the same time, Alphabet's own Gemini chatbot app recently gained over 450 million monthly active users and has been quickly gaining traction in recent months. The release of all of those AI products and features in recent quarters shows that Alphabet takes competitive threats seriously, and the company should be able to mitigate the risk of disruption to its business in the foreseeable future. On top of that, those products and features not only helped Alphabet improve the performance of its search business in Q2, but they also should make it possible for the company to continue to dominate the search industry for years to come. Considering that the search segment within the digital advertising market is also expected to receive a significant amount of advertising dollars in the upcoming years, Alphabet could be the biggest winner from this if it continues to mitigate competitive risks. When it comes to Alphabet's cloud business, it's also performing great, in part thanks to the ongoing generative AI revolution. The cloud revenues in Q2 increased by an impressive 31.7% to $13.6 billion. At the same time, the company during the recent earnings call stated that in the first half of 2025, they signed the same number of deals worth $1 billion and above as they did during all of 2024. This shows that the demand for Alphabet's cloud offering also remains solid, and given such growth, it would make sense to assume that the performance of the cloud business in the second half of the year should also be impressive. Also, since the cloud market is expected to expand at a CAGR of 20.4% and be worth over $2 trillion by the end of the decade, it's likely that Alphabet's cloud business will continue to grow at a double-digit rate and create additional shareholder value in the following years as well. Considering all of these developments, it makes sense to assume that Alphabet still has plenty of growth opportunities, and the upside is still there. While it would be difficult to accurately forecast Google's trajectory in these fast-changing times, one thing is for sure: Google is definitely undervalued when taking into account everything that was previously mentioned and when comparing it to its peers in the tech sector. The current stock price is $204 with a market cap of $2.47 trillion. The closest company in terms of earnings is Microsoft. Both are very similar with an annual net income of $100 billion with a market cap of $3.88 trillion. In a simple scenario where we take the average of 3.88 and 2.38, we get a market cap of 3.13 trillion. As of July, there are 12.94 billion shares outstanding. $3.13 trillion / $12.94 billion plus for 200, so it was 260 share. This isn't even assuming the explosive growth that is highly likely to come with the generative AI revenue within the next decade. This is just assuming things stay the way they are right now. Considering that the street is even more optimistic about Alphabet's future and thinks that the upside is even greater, it makes sense to believe that the company's stock remains a solid investment right now. Some risks to consider. While Alphabet has been mitigating the competitive risks by releasing its own AI features and products, there's still a risk that that won't be enough to fully protect its search business from disruption. Right now, ChatGPT already has close to 800 million weekly active users and has been expanding its share within the AI search market lately. The release of OpenAI's newest model could make ChatGPT even more popular and make it harder for Alphabet to fully offset the competitive risks. On top of that, the regulatory risks are becoming a serious issue. After the American federal judge Amit Mehta ruled that the company holds a monopoly in the search business, the Department of Justice has proposed various remedies, which include the sale of the Chrome browser. However, no matter what the ruling will be, Alphabet already said that it will appeal it, which would result in another legal battle that could take a few more years until the final verdict is made. I already explained in one of my articles on Alphabet that it took years for the final verdict in other cases to be made after the company appealed the initial ruling. That's why, despite the fact that the rising regulatory risks are becoming a major issue, they're unlikely to materialize in the short to near term. The bottom line, overall, Alphabet remains a solid investment despite all the risks and challenges that it faces. It continues to dominate the search industry and will likely retain its leadership thanks to the latest releases of various AI products and features, while the recent growth of the cloud business indicates that the upside is clearly there. That is why I remain bullish about Alphabet and have been buying more of its shares recently.